Why is it that I feel so much pain when I'm trading? Is it because there's something in my history, related to this desire to win?
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management, and profitable psychological triggers. Welcome to the Two Traders Podcast.
Welcome to the Two Traders Podcast. Walter here and Darren. We're going to talk about one of the listener questions today, Darren. So the question is, I have a lack of confidence in the analysis and therefore having to get out of the trade very soon with little profit out of fear of it failing. So what say you to this, Darren?
Yeah, I think the word that jumps out at me is the analysis. What I think the issue here is the trader is associating the problem with the element that probably isn't the problem and missing the real core of the issue. And if you have lack of confidence in your analysis, and you need to question, well, have you back-tested the process that you're using, the strategy you're using? And you should have, if you're trading it, and you should have a clear idea of how it's likely to perform over a period of trades. And the real issue here is that all of us as traders, fail to accept that trading is generally about feeling bad. And, whether you're winning or losing, or whether you're following your process or not, there's always going to be an element of pain associated with trading. It's an uncomfortable environment to be in. So that lack of confidence feeling is generally always there. Now, if you know that that's natural to feel that way, then you can focus on dealing with the problem, which is basically your feelings when you're trading. But if you associate that with like a particular part of your strategy, such as your type of analysis, then you're never going to find a process of dealing with that, and you're always going to be making mistakes. I heard a great quote the other day, which was simply, trading is pain. And it is. You're always going to feel bad. You're always going to feel that, you should have stayed in your trade longer. You're always going to feel like you shouldn't have taken that trade because it was a loser. And the important thing to note is that's a natural feeling, and you need to work on processes to deal with that, rather than associating it with a particular technical part of your strategy.
Right. So basically what you're saying is the way to adopt a healthy outlook is to change your perspective here. Is that right?
Yes, because let's be honest, this trader must be using some sort of systematic analysis to decide when to trade and when to get out of his trade. And if he's decided that that's the way he's going to trade, then he must have done some testing on it, and it must have a positive outcome. Otherwise, you'd look for something else. You wouldn't just continue with it. So if you know it's got a positive expectancy, and then when you're trading it, you've got a lack of confidence, it's not the analysis that's the problem. It's the fact that in the moment, you're struggling to deal with the emotions of actually trading.
Yep, exactly. And what I and most traders, I suppose, have probably realized is there's several different ways of feeling the pain, as you say, in trading. The first would be that there was an excellent trading opportunity and you missed it for whatever reason. And that's usually the one that a lot of traders think, oh, that's terrible. That's a really tough one to deal with. The other one would be that you took a trade and it ended up being a loser. Now, sometimes what will happen when it's a loser is you can go back and go, well, I should have known here, I should have got out earlier before I lost this much or whatever, or there was a little bit of profit available to me, I should have taken it instead of letting it turn into a loser. Those sorts of things start to creep up too. And then finally, the situation where you have like a trade that almost turns out to be a winner, but then snatches defeat from the jaws of victory and becomes a horrible loser. And so those are the three types, right? There's the really good trade that turns bad. There's the really bad trade that might have been good. And then there's the excellent trade that was no trade at all. To me, those are the sorts of things that traders sort of roll around over and over again, those sorts of situations. And the easy way, I believe, to sort of change or adopt a different point of view is to reframe it. So reframe this in a way so that you're not really looking at the outcome. So really you should be concentrating on your execution, on what you're doing in terms of the parameters of what your system sets out to do. So for example, if I have a trade that goes all the way, and then this happens to me, as many other traders, it goes all the way really, really close to where I want to get out and take some profit, but then turns around and comes back. What that usually means is it will hit a break-even stop, because my stop's been moved to break-even once it gets close to that target. Now, a lot of traders would look for reasons to change the system or add rules so that if it goes really close to your target, you can take profit early. But I know that that's not really going to help me, because that's just going to reduce my average winner. That's not going to help my trading system. It's going to change it into something different than what I tested. And what that means is I try to reframe that break-even result. So instead of calling this a trade that was a winner that turned into a break-even, I call it the trade that never happened. So any trade that I have, for me, that's a break-even trade, I just consider it's wiped off the books. It could be a small win or a small loss, obviously, depending on the exactly where you place your stop and the swap on the pair, if you're paying or if you're getting a little bit. So to me, that's one of the solutions here for people that are listening to this is to reframe, so to look at it from a different point of view. So I agree with you in that respect, Darren, and I also think that sometimes we get caught up in the result, and we should really be focusing on something different, which is the execution. And I think the very best traders I've come across, they are focused on execution. They don't adopt and change and twist things around and add rules and caveats and if-then sort of situations based on the result of the trade. Instead, they're focused on the actual execution. So what do you think about that? Like, in terms of execution, is that something that you can say, yeah, that makes sense in terms of how do I eliminate this lack of confidence because basically what this trader is saying, I have a lack of confidence in my analysis and getting out of trade very soon with little profit because I have fear of it failing. Basically what they're saying is they're holding themselves accountable for the result of the trade. And so they're saying, whatever I'm doing here is the reason why this trade ends up the way it does. And what I'm saying is, let's shift that focus away from, okay, if you make money in a trade, you did good, and if you don't make money in a trade, you did bad. Let's not talk about that, because really what you should be doing is looking at, am I executing the system? Am I sticking to the rules as I should? Am I working within the parameters of that box I've set up for myself? And if so, then that's good, regardless of result.
Yeah, you need to judge the trade on how you acted. Did you follow your plan? Did you do what you meant to do, or did you change at the last moment for some reason that wasn't part of your process? And I think there's a kind of a notion as well that we can get to a point where good analysis will eradicate all of those unpleasant sides to trading. And if your trading still has unpleasant elements to it, then somehow that can be resolved just by better analysis. And any sort of taking any time to study results over a long period of time, you'll realize that that is just kind of, it's something that's not really attainable. And for sure some people may get to that element, but generally most successful traders are working a risk model over a long period of time. And also when you have good analysis and you work out that this is kind of your edge in the market, real edges are much finer than we expect they're going to be. We expect that when we do have an edge, that it's going to be much more clear cut. We're going to win much more than we ever do. We're going to have less drawdowns, and it's going to be much smoother as well. We're going to expect it to be very smooth, generally winning all the time, and when we have losses, they're always very small, and it just doesn't pan out like that. And you'll have periods of performing really well, and you'll have periods where it's really difficult, and you have to look at the bigger picture. And so I think trying to eradicate those unpleasant feelings by analysis alone is a much harder route to go down than accepting that even if you're trading well, even if you've got good analysis, there's going to be elements in that feel unpleasant still, and you're better just to kind of accept that than try and remove it completely from your game.
Yeah. So what do you do? So as a trader, how do you grow to accept that? Because I mean, I imagine that a lot of people who get into trading, and I could be wrong, but a lot of people who get into trading, they've probably seen some sort of success in another domain in life, and so they're trying to make this trading thing work, and they're trying to get to a point where they feel like they're pretty confident that they can go in and they can make money out of the markets. Now, trading's very different, and I've heard some of the best quotes about trading I've heard are this idea that trading is about losing, and trading is about learning how to lose, and trading is about really kind of looking at the bigger picture in terms of, instead of looking at the last trade, which a lot of traders do, and adopting a different strategy and watching that morph based on your last trade or last couple trades, try and look at chunks of trades. So try and look at the next 100 trades, then take a step back and analyze. Don't spend time analyzing the last 1, 2, or 3 trades. That's not going to be very productive. So a lot of people who get into trading, they're successful. They've found success in other things, other areas of life, and they're trying to make this work, and it's very foreign to them because, as you say, Darren, you can look back at the charts and you can, hindsight bias creeps up, optimism bias creeps up, all of these cognitive biases creep up and say, whisper in your ear, oh, you would have done really well here. Oh, you would have taken that one. Oh, you would have done that. And you see all these brilliant situations to make money in the markets, and you forget or skim over or don't even ignore those ones where you would have lost. And I believe trading is really about learning how to lose. It's about learning how to let go of the individual result for each individual trade, and instead you need to sort of enable yourself to see it from a different point of view. See it from how well are you executing and how are your trades doing in terms of the chunks of trades, not the individual trades.
Yeah, definitely. And we kind of want that short-term fix, don't we? We want to win every trade. We want to be winning at the end of the day, at the end of the week. And it just doesn't come quite as smoothly as that. But, we're quite fortunate nowadays because there's so much out there from traders that have had long, successful careers, and the information is everywhere in books and on the internet. And if you look up the traders that have got a sustained success in the market and a great track record, they will all tell you pretty much the same thing from completely different perspectives, from different trading styles and different strategies. They'll all be telling you essentially the same thing, which is that is about the long run and accepting the losses. Obviously there's a lot of bad information out there as well with the sort of Instagram traders with their pictures of Ferraris. And, I made all this money last week as well. But, if you're serious about trading, go and look up the traders with the good track records and have a listen to what they say. And then, make that part of your game, and then perhaps go back to your strategy and look at it from a different perspective.
Yeah, and I would look at sort of the other side of the coin, which is the traders who want to win, and see what happens to them. So you can look up different traders who have reportedly gone bust. Now, I can't verify if they have or not, but for example, you can, and I'll put this link in the show notes for this episode, but you can look up Victor Niederhofer, who wrote the book The Education of a Speculator. And apparently, reportedly, Victor Niederhofer had a student who is a Nassim Taleb, who wrote The Black Swan and Anti-Fragile and all that. I know you're a big Taleb fan, right, Darren?
Yeah, I really like his stuff.
Yeah, and he consults with funds and teaches them how to deal with essentially black swans in the market and how to insure against that, how to insure their fund against those sorts of situations. But what's interesting is if you look on the internet, this is what you're going to find. You're going to find a lot of people want to win. So you're going to find, especially when you get into these forums, these free forums, you'll see any number of people toying around with the idea of some sort of martingale method. And so that's always going to come up. And martingale method is essentially it's basically the will to win translated into an equity curve. It's basically what it is. It's this desire to win all the time is basically where the martingale came from. And you'll see if you look at it, you'll see that the martingale equity curve is pretty bad. So what happens typically is it's a straight line, 45-degree angle, up, and then boom, it just falls off a cliff. And we've talked about this, and it's basically gets margin called or whatever, and the account's toast. And there was a guy, I won't really name names or anything, but there was a guy that I heard about, and it was kind of, he had sold a lot of robots. This is back in the heyday of the Forex trading robots, and he knew somebody who I knew, and this guy sells this robot that's basically selling people the idea that they don't have to lose in Forex trading. So you buy this robot, you're always going to win. Okay, that was the idea, and that's why he sold a whole bunch of robots and made a whole bunch of money. And he told me, he said, robots are a load of crap. He said that to me. And his whole empire was based on selling people crap robots, because by his own words, robots are crap. They don't work. Well, that's what he did. He sold this idea that you can make money by winning all the time. And Victor Niederhofer, who had his student Nassim Taleb, Victor Niederhofer basically started funds and apparently, reportedly, blew up a few funds, which just basically made money every day, a little bit of money every single day, and then one day they, boom, went bust. When the market got a little bit out of control, a little bit volatile, that's when he would go bust, because he was basically writing options for things that he didn't own. And so when the market finally got to the point where he had to pay up, he couldn't because he didn't own it, and that was basically what happened to him. At least 2 times. Some people report 3. And Nassim Taleb has taken the other side of that. Now, Nassim Taleb has taken the other side where he just wants to lose money every day, and then one day, boom, he hits the jackpot. So he did the exact opposite of his mentor. The reason why I'm mentioning these things is we have this strong desire to win, and in trading it's no different. And that may serve you well in other areas of life, but it's like if you are a business owner or whatever and you want to crush the competition or whatever, these sorts of things, maybe that works there. But when it comes to trading, you've got to learn how to lose, like Nassim Taleb did. And if you try and pander to that feeling of really wanting to win all the time, like the martingale traders or Victor Niederhofer, you're probably going to get to a point where you're going to go bust. So it's up to you. I mean, you can decide. You can feel good a lot of the time and then one day go bust, or you can adopt a different point of view where you're taking a longer point of view. You're looking further out to the horizon, and you're deciding that instead of trying to win all the time, you can lose a little bit, lose more than is comfortable, and work on yourself. What does that mean to you that you feel really bad when you're losing? Is there something, in your history that you can point to and say, yeah, this is kind of what's going on. This is why these feelings are bubbling up for me. It's because of essentially my psychology and my background. That's why it feels so painful for me to go through these losing periods. So it's really an opportunity for you as a trader to get better as a person by embracing these sorts of things and looking at why it is that you always want to win and so forth. Because I do believe that getting really, really good at this is, learning to let go and not trying to win all the time. And letting go can be as simple as watching a trade go 90% of the way to your target and then coming back and stopping you out at break even. Or watching a trailing exit execute precisely as you set up the trailing exit, so that instead of, maybe you're up 600 pips on this trade, and then the trailing exit finally gets clicked in, and you only make 390 pips because, it retraced, or there was a gap over the weekend, or whatever happened. So that can be letting go too, and allowing yourself to just go with the system rather than trying to impose your will to win. So there's a lot of really sort of deep stuff when you get into this, Darren, this idea of, learning how to lose and letting go, and sort of the introspection involved in, why is it that I feel so much pain when I'm trading? Is it because there's something in my history, related to this desire to win?
Yeah, and I think that there are a few simple things that we can incorporate in our trading strategies as well that reduce the effects of these bad emotions, or the effects of making bad decisions because of emotions. And I find that a lot of traders don't define their exit clearly enough in their strategies, and I know the reason that is it seems more appealing to have a completely discretionary exit, because that way it gives you an out when you have these bad feelings. So like you say, if you get really close to your target and it doesn't make there, then you can basically analyze yourself out of the trade. You can say, there's a descending trend line there, so I'm going to take profit early on this one. And you'll find that, we're really good at doing that. We're really good at talking ourselves out of a trade and building a story behind it, so we can feel comfortable with making that decision, knowing full well that, we're not sticking to our plan. So I think everyone should have really clearly defined exit plans, and there should be a really clearly defined trigger as when you make those decisions. And you can have a selection of options that you pick to use, but again, it needs to be clearly defined. And then you need to go through a process of just working that system. That in the end will give you more confidence in your system, but it won't happen overnight, and it's going to take a lot of practice to get to that point. But I sometimes listen to people describing to me how they're trading, and I think, well, that is going to be an issue. And it might not be whilst you're sat here or when you're back testing, but trust me, when you're 400 pips down for the week and the market's being a mare and it's going against you, you're going to come unstuck with that lack of structure to your trading. And I think, we're always, with our strategies, we're focusing on what is going to make the best money. And a lot of the time, the rules we should be incorporating should be what is going to keep me out of the most trouble. Obviously, there needs to be an edge there, but you can build structure into that as well, where it's going to stop you from making silly mistakes. And if you can reduce your kind of human errors down to as small a number as possible, that will make more of a difference on your bottom line.
Yeah, exactly. Yeah, that's great. Okay, so the way I look at this, and it may be slightly different the way you look at it, is we kind of get into this trap, and it's really instructive. If anyone has ever seen an auction, have you ever been to an auction, Darren?
Yeah, I go to lots of auctions.
Awesome.
I like them.
Yeah, they're so instructive, because if you've ever been to an auction, you'll see what's going on is, that people walk in there, okay? It doesn't matter what they're auctioning off, but they walk in there with a plan and go, look, I'm only going to spend X amount. But what happens? What happens in the end? When in the heat of the moment, these people start spending much more than they had anticipated or planned for. And sometimes you can see like the husband and the wife, the wife's like tugging on his elbow or whatever. What are you doing? These sorts of things. And so what's interesting is that I believe, and I've talked about this a lot in the past in webinars and things like that, about how we get sucked into these basic emotions in the markets, and fear and greed, obviously, people talk about that, and that these come up too in the auction. So before the auction, you may walk into the auction, you have a plan. You go, well, I'm only going to spend $1,100 on, buying this brass monkey or whatever it is, right? I really like that brass monkey. I'm going to bid on it when it comes up at the auction, but $1,100 is all I'm going to spend. And then in the heat of the moment, you get into this bidding war with somebody, and you really got to have it. Next thing you know, you walk out and you spend $1,600. So, my philosophy with trading is to get out of that fear and greed, to get out of that reactionary style of thinking and trading, and instead move more into the planning area of the brain. So instead of we're not talking about that area of your brain, which is basically where emotions lie and where you get really hot-headed and revenge and these sorts of things come up, envy. Well, what we're talking about here is planning, using the frontal areas of your brain where you're actually sitting down and going, well, this is what I'm going to do, and that sort of thing. So in trading, an easy fix is to move away from the lower time frames where things happen really fast and you can get caught up in the emotions of the market, and move to the higher time frame. That's a real easy fix. But when it comes to trading, having a list of, like a checklist of things that you say, okay, well, this is what it's going to look like. I have to have all of these things, or 5 out of these 7 things in order to take a trade, or whatever it is. And then I've got to have, like you say, having different options for an exit. That's a really cool way of incorporating some freedom into your system, but at the same time, it sits within the confines of what you've set out to do and what you've tested. So you have different ways of exiting a trade. All of these things can be laid out in front of you, so you're looking at them. So when you look at the screen and you say, well, I really want to do this, you look at your checklist, you look at your system, you say, well, does that match up? Does that checklist enable me to do this, or am I just going with fear and greed here? What's happening? Because a lot of traders, they run into this impulse problem where they know they want to do something, they know it's the right thing to do, but they can't do it. And so I believe it's because in many cases they're getting locked into that fear and greed mode, and they're at the auction. They're in the auction, they're in the heat of the moment, they're trying to win, and it's not really about sticking to what you've set out to do, your plan, and what you've back-tested and what you have confidence in, but instead you're trying to do something completely different here. So that's another thing I think that people, it's really instructive. Go to an auction, see what happens, pay attention to what people are doing, and then ask yourself, are they sticking with their plan, or are they completely off base here? If they've gone off track because they came in with a plan, this is how much I'm going to spend, and then they walk out of there, and you'll see it happen all the time. So what do you notice at auctions? I'm curious.
Well, yeah, the same thing really. People pay much more for items than they intended to, and they generally, the auctions I go to, people are trying to buy a bargain. It's kind of antique furniture and reclamation that I go to. Generally they're looking to purchase something that they can add value to and sell on. And, what I do notice there is that the professionals, the people who make a living, they've learnt their lesson, through probably years of paying too much for something because they wanted it and then not making any profit when they sold it on. And then you get the people who haven't really been around very long, who, like you say, get sucked in and are probably going to end up losing money. And I guess that's what's happening in the market every day, because the market is an auction as well. I think what you were saying about the pen and paper is really good. I know it's like one of the hardest things to do is to work with pen and paper when we're in the kind of computer age. You're sat there at a computer and you're expected to go and make notes and check stuff that's written down on pieces of paper. But it really does, on a psychological level, like you say, it kind of switches the brain if you kind of refer to something written down by hand. And I'm doing it all the time. And, I write notes down, and I take photos and send them to people that I'm working with, and they say, I can't read it because it's mirrored. So I send them trading rules, and it's all mirrored, so they have to read it backwards. And, that's just me messing with them. But it is a really good tool, and you need to, like I was saying earlier, the edges are so fine, and if you're just going to rely on a strategic edge, then you're kind of limiting your abilities, and you kind of need a bit of a mental edge as well, and you need to be mentally better at adapting than all of the other traders out there, because we're in effect we're all trading against each other. It's kind of a one-on-one battle out there, and you need to have just these little slim edges that you're working out over the long run. So, confidence, analysis, getting out of trades early, there's something that we all suffer from, but there are simple things to do to correct it, but just start thinking outside of the box and stop focusing on just a single element, which is your ability to read price action and technical things. You have to start thinking much broader than that.
Yeah, that's good. That's great advice. I agree. Obviously, having the checklist, having the rules in front of you, having your sort of framework, and deciding whether or not what you're going to do now, what you're thinking about doing. You got that itchy finger. You want to take that trade if that fits with that. And I talk about this at the workshops. When you write stuff down by hand, like Darren is saying, guys, that is a completely different thing to your brain than typing or taking a screenshot. It's completely different. So it's definitely a better way to go. I have this notebook. It's sitting right in front of me. And, this is where I write down my trades. And basically, I'm focused on the execution of the trade. I'm not focusing on the results at all. You could go through here and not even know, is this system making money or not? So, yeah. So the other thing I would say, and this idea just came to me, what if you, as a trader, let's say you're starting out and you're saying, okay, this sounds good. I want to do this. I want to handwrite things down. I want to have my checklist. I want to make sure I've got all my trades under my belt back testing wise and so forth. So I'm confident when I go into this. And maybe you do what I recommend, which is you start out with your back testing, and then you go to the small money account, and then you go to a larger account. So you kind of graduate up. Here's one thing that you could think of and sort of adopt this point of view. Sometimes it helps me to think in terms of extremes. So whenever I'm trying to figure something out, I'll just say, well, what would the extreme view be here? Because that can kind of center you, and you can see the sort of the rules of the game. So let's say that what we're talking about here, what Darren and I are talking about here today, makes sense to you. Let's say that you decide, all right, well, what I want to know is what kind of trader, what would a trader look like if he was absolutely like doing everything wrong? You know what I mean? And list that out. Actually, handwrite that out. List out all the characteristics and all the procedures and processes that this trader would follow if he's an absolute idiot. Like, you know, this is that trader out there in the market who's going to pay you, right? He's going to pay you from his mistakes. So I would write down all of those things. And now what you have here is kind of like that mirror image of what you don't want to be, right? You have exactly what you need in terms of building a template for you to follow, because you know you don't want to do all of those things. And sometimes it's easier for us to say what we don't want rather than what we want. So that's one way I think that may help people too, is just build the idiot trader, build the imperfect trader, and then work off of that. That could be another like a great starting place for someone.
Yeah, definitely. Look what everyone's doing. If most people are losing money, then go and have a look on the retail forums. Read what everyone's doing. Examine, analyze their trades. And you'll notice that most people are making the same problems, and none of us are that unique. We all have the same problems because we're all kind of made up basically the same. And then you can kind of zoom in on eradicating the problems rather than just trying to improve your analysis.
Cool. Well, thanks for your time, Darren. I appreciate it. We will see you next time.
Cheers, Walter. I'll see you soon.